Hello everyone, Dennis here. This is GCE O Level Mathematics, Lecture 13. In this lecture, there are two topics that we will discuss. The first one is commissions, and the second topic is personal income tax. This video is brought to you by Ace with Dennis. Now, learning can be smart, not hard. Don't forget to subscribe and press the bell notification button to stop missing out free lessons from me. Commissions. Many salespersons, like property agents, insurance agents, car dealers, etc., earn money by commissions. Some earn with basic salary plus commissions, and many of them earn purely on commissions, which means they only earn if they make sales. If not, they earn nothing. Usually, commissions are paid as a percentage of the sales that they make, which is the selling price. And usually, the rewards are high. They need to work in an entrepreneur mindset to earn the commissions. Let's look at example 1. A property agent sells a condominium unit for $1,500,000. He receives a commission of 3%. Calculate the amount of commission the agent earns. So here's the solution. So the calculation is very simple. Commission earned by the property agent equals the sales of the condominium unit, which is $1,500,000, times with the rate of the commission, which is 3%, and the value is $45,000. As you can see here, this is what I mean. The rewards are very high. Just to make one sales, this property agent can make $45,000. Example 2. An insurance agent sold an insurance policy that cost $320,000. She receives a commission of $5,600. Calculate the commission rate that she charges. So here's the solution. The calculation also very simple. It's all about percentage. Commission rate equals the commission received divided by the sales made times 100%. So for this case, the commission received is $5,600 divided by the total sales that is made, which is $320,000 multiplied with 100%, and the value is 17.5%. Example 3 is a fixed salary and commission example. A salesman has a fixed salary of $1,500 and 5% of commission on the total sales he makes a month. In a particular month, his sales is $56,000. Calculate how much he earns in that particular month. So here's the solution. The earning of the particular month will be equals fixed salary plus commission. So his fixed salary is $1,500 and the sales he makes on the month is $56,000. So the commission will be $56,000 times 5%, and the earning on the particular month for the salesman is $4,300. Personal income tax. All individuals whose incomes are derived from Singapore or received in Singapore from sources outside Singapore during the year from the 1st of January to 31st of January need to pay income tax. And this applies to most of the countries in the world as well. A few important terms to understand here. The first one is total income. So total income means the total income that the individual earns or receives within the year of assessment. Tax reliefs. Tax reliefs are reliefs that the individual can claim so that the certain amount of income can be exempted from being taxed. Certain criteria must be met. Here are a few examples for tax reliefs. So common ones are personal relief, wife relief, child relief, life insurance premiums, CPF contributions, donations to charitable organizations, and etc. Chargeable income. So what is chargeable income? It is the income that are chargeable income tax after deducting all the tax reliefs. So chargeable income will be equals total income minus total reliefs. Okay, then the last one, tax payable. Tax payable will be the amount of tax that need to be paid. The next thing I want to introduce you is the income tax rate table. And this is how income tax rate table looks like. The source is from the IRS website, and it is from the year of assessment 2017 to the year of assessment 2023. It is subject to changes by the government. You can go to the IRS website and look for this income tax rate table. Different year of assessment will give you different income tax rate table. I will explain to you how to use this income tax rate table in the next examples. Now, let's look at example 1 to learn how to apply the income tax rate table. Calculate the tax payable for a chargeable income of $45,500 according to the following tax rates. And here is the income tax rate table. So here's a solution. So for this case, the chargeable income is $45,500. We will split this chargeable income into two portions. So the first portion will be the first. So how do we get the first? We just look at the income tax rate table here. We look for the first, which is close to the $45,500, which is the chargeable income. So for this case, right, the first $40,000 will be the nearest to our chargeable income here, which is $45,500. Okay, now this is $40,000. So how we want to charge this $40,000 is already mentioned in the table, which is $550. So the first portion, the tax payable will be $550. Now we move on to the remaining portion here. The remaining will be $5,500. Okay, remember these two portions, when we add them together, will give us back the chargeable income. Right, now how are we going to charge this remaining $5,500? It is 7% income tax rate. So $5,500 times 7%. Okay, so for this case, the total tax payable will be $935. Now, let's try more examples to practice how to use the income tax rate table. Calculate the tax payable for a chargeable income of $36,000, $96,500, and $130,500 according to the following tax rates. So again, here is the income tax rate table. So the first chargeable income is $36,000. So the tax payable will be, first look for the nearest first, which is close to $36,000. So for this case, it will be first $30,000, and it is charged as $200. Then the remaining will be charged 3.5%. So the remaining will be 36,000 minus 30,000 times with 3.5%. So the total tax payable for $36,000 will be $410. So for the tax payable for $96,500, look for the first, which is close to $96,500. So it will be $80,000. So the first $80,000 will be charged at $3,350, and the remaining will be charged at 11.5%. So the remaining is $96,500 minus $80,000 times with 11.5%. And the total tax payable will be $5,247.50. Lastly, the tax payable for $130,500, look for the first $120,000 and it is charged at $7,950. The remaining will be charged at 15%, so the remaining will be $130,000, $130,500 minus $120,000 times with 15%. And the total tax payable for $130,500 is $9,525. Now, let's discuss example 2. This example involves tax reliefs. In a particular year, Mr. Chan earned a gross annual income of $76,500. He is eligible to have the following tax reliefs. The income tax rate table is as shown below. So here is a list of tax reliefs that Mr. Chan can claim. And this is the income tax table. Given that he has 2 healthy children and 1 handicapped child, calculate his income tax payable. So here's the solution. The first relief that he can claim is the personal relief, which is $4,000, and followed by the wife relief, which is $2,000. Next, for the child relief, he can claim $4,000 per child for healthy child and $7,500 per child for handicapped child. So he has 2 healthy children and 1 handicapped child. So the child relief that he can claim will be 2 times $4,000 plus $7,500. Next, CPF contributions is $15,300. So he can claim $15,300, followed by donation $720, followed by life insurance relief $3,500, and the cost fees relief, which is $2,000. Okay, add total together, it is $43,020. So now we can calculate the taxable income, which is the total income minus all the tax reliefs. So for this case, the total income is $76,500 minus the total reliefs, which is $43,020. So the taxable income is $33,480. Now we want to calculate the tax payable. So look for the first $30,000 and the tax is $200 and the remaining is charged at 3.5%. So the remaining will be $33,480 minus $30,000 times 3.5%. So the tax payable is $321.80. Let's try this example to practice on the tax reliefs. Mr. Mutu is 57 years old and he is earning $14,800 per month and gets a bonus of 2.5 months at the end of the year. His wife is a working mother who is earning $1,800 per month. They have 3 healthy children. Mr. Mutu is about to file his income tax. With reference to the income tax rate table as well as the personal relief table, calculate A. Mr. Mutu's total income for the year, B. Mr. Mutu's total reliefs claimable, and C. The amount of tax payable by Mr. Mutu. Here's the solution. For A, to calculate the total income for the year for Mr. Mutu, we need to count the total months. So he works 12 months and receives 2.5 months of bonus. So the total months is 14.5 months. Now the total annual income will be, the monthly income given is $14,800. they will multiply with 14.5 months, and the value is $214,600. B. To calculate the total relief, the first relief is the personal relief. So Mr. Muthu is 57 years old, hence his personal relief is $3,000. Then for the spouse, his wife is working and earn $1,800 per month. So the relief is $2,000 because his wife income is not more than $2,000. Next one, child relief. So they have 3 healthy children. So Mr. Muthu can claim $4,000 per child. So it's 3 times $4,000. Next one, working spouse child relief. So first child is 15% of wife's earned income. Second child is 20% of the wife's earned income, and the third child is 25% of the wife's income. So just follow this condition. So 15% of the money income of the wife, which is $1,800 for the first child. The second child is 20% of the income from the wife times 1,800, and the third child is 25% times $1,800. The last one is the CPF contribution relief, which is 10% of the income. So it's 10% times $214,600. So the total relief will be $39,540. Lastly, for C, to calculate the amount of tax payable by Mr. Muthu, we have to calculate the chargeable income first. So the chargeable income will be total income minus the total reliefs. Total income is $214,600 minus the total reliefs, which is $39,540. So it is $175 and $60. So now we can calculate the tax payable. Look for the nearest first, which is the first $160,000. It is charged at $13,950, and the remaining is charged at 18%. So the remaining is $175,060 minus $160,000 times with 18%. So the tax payable will be $16,660.80. Sometimes income tax rate table can be given in different form. Example 3, we discuss about different form of table. The income tax payable on the chargeable income is calculated according to the following table. So here's the table. A. Miss Lee earned an annual chargeable income of $75,000. Calculate her income tax payable for the year. B. George paid an income tax of $3,917.50. Calculate his chargeable income for the year. Here is the solution for A. So Miss Lee's annual chargeable income is $75,000. We can split the income into 4 portions. Okay, so the first portion, referring to the table, the first $20,000 is charged at 0%. And the next $10,000 will be charged at 3.5%. Followed by the next $10,000 is charged at 5.5%. And lastly, the remaining is charged at 8.5%. So the remaining for this case is $35,000 and is charged at 8.5%. Now let's double check. The total income here should be $75,000. So from here we can calculate the total tax payable. So the first is 0%. We don't have to calculate followed by the $10,000 charged at 3.5%. Then the next $10,000 is charged at 5.5%, and the remaining $35,000 is charged at 8.5%. Hence, the total tax payable for Miss Lee is $3,875. Question B, we are doing backwards as the question gives us the tax payable, which is $917.50. We have to calculate the chargeable income for the year, right? So we have to calculate one by one. The first $20,000 is charged at 0%, so it is $0, followed by the next $10,000 is charged at 3.5%, so the tax is $350. Then the next $10,000 is charged at 5.5%, so it is $550. Then we sum up with these three amounts will give us $900, which is very close to $917.50. So the remaining here is X. Okay, the X will be $917.50 minus 900, which is $17.50. And this $17.50 actually is calculated from the remaining of the chargeable income multiplied with the 8.5%. So the equation is $17.5 equals Y times 8.5%. So the Y will be 17.5 times 100 over 8.5, which is $205.88. Hence, the chargeable income will be $20,000 plus $10,000 plus $10,000 plus $205.88, and the sum is $40,000, $205.88. Now, let's practice this example for different form of table. The income tax payable to be paid from a man's earned income is calculated as follows. The first $10,000 of earned income is tax-free. The next $10,000 is taxed at 3.5%. The next $5,000 is taxed at 6%, and the remainder is taxed at 8%. A. If the man earns $68,000 in a year, calculate his income tax. And B. The man's wife pays a total of $2,250 in income tax. How much does he earn in a year? So here's the solution. For A, we need to split the income of the man into 4 portions. The first portion is $10,000, which is 0%. The second portion is $10,000, which is charged at 3.5%. The third portion is $5,000, which is charged at 6%. And let the last portion as X dollars. We know that the total must be the sum of the earned income for the man, which is $68,000. Hence, the X is $68,000 minus the first portion, which is $10,000, minus the second portion, which is $10,000, minus the third portion, which is $5,000. So the X will be $43,000, and it is charged at 8.5%. Hence, the total tax payable will be, the first one is 0%, then is 0. We don't have to write here, followed by the second portion, $10,000 times 3.5%, the third portion, $5,000 times 6%, and the fourth portion, $43,000 times 8.5%. And the value is $4,305. So solution for B, we are doing backwards or reverse again, right? We have to calculate one by one. The first $10,000 is tax-free, hence it is $0. The next $10,000 is charged at 3.5%, and it is $350. The next $5,000 is charged at 6%, so which is $300. So the total here it is $650. The remaining income tax will be $2,250 minus $350 minus $300, which will give us $1,600. So this $106,000 comes from the remaining income charged at 8%. Hence, the remaining income is $1,600 times 100 over 8, which is $20,000. So the chargeable income will be the first $10,000 plus with the next $10,000 plus the next $5,000 plus the remaining income, which is $20,000, and the total is $45,000. Alright, that's all for this video. Thanks for watching. Do you have any questions or thoughts to share? Feel free to write it down in the comment area. I would love to hear from you. Do you like this video? Please don't forget to like it and share it to your friends. Until then, see you in the next video. Have a great day ahead.